and thanks for tuning in to this week's analytical live stream from Exness. I'm Michael Stark, Financial Content Leader. I'm going to be presenting this live stream today, and we'll be discussing some of the important upcoming events that are going to affect markets, looking at some charts, and hopefully we should have plenty of time to answer all of the questions that you might have. But before we get going properly, please leave a comment if you have any issues hearing or seeing. If everything is clear, you can hear, you can see properly, please just drop us a comment, and that way we know everything is okay. And let's just see what comments we've got so far. We've got some flame emojis, we've got heart, nice, glad to see you're excited. Something in Chinese, fortunately I can't read Chinese. If you could leave a comment in English, then I would be able to read it, please. Alimran says hello from Bangladesh. Hello, Mr. Alimran, thanks for joining us. Matthias Chidodo says from Tanzania, welcome Matthias, thanks for joining us for the stream today. So if everything is okay, nobody has any issues seeing or hearing, then that's great. I think we can probably start. I would just remind you at the very beginning, as usual, please remember that nothing that I'm saying in this stream is a recommendation to trade or to do anything, and it's not advice. And we're not going to be doing any live trading. I'm going to be giving some of my personal ideas for how I might trade. Does not mean that you should do the same. Any decision that you make is at your own risk. You should not copy me. You should always do your own research. And I would just remind you that the account we're going to be looking at here is a demo account. It's not a live account. It's not real money. It's a demo account that we're looking at here. And everything here is for informational purposes only, I would stress. So we have somebody else. So we read that. Alimran says hello from Bangladesh. Yes, hello, Mr. Alimran. I'm fine, thanks. How are you? And Sashin 96200 says, will gold stop rallying? We will get to that soon. Yes, of course we will cover gold. But first, let's just do the introduction, and then we'll be talking about gold, one of the very first instruments, Sashin. So please just bear with us for a minute or two. So firstly, let's look at the client area of Exness. Here we are in the personal area. Reminder, this is a demo account, it's not a live account. And if we go to the left tab here of the personal area in Exness, under analytics, we can get firstly analyst views, which is a series of ideas and signals that come from Trading Central. Why is it doing that? No, yeah, that's right, I don't want to do that. And you can click on any of these ideas, and it gives you what they think is going to happen, Trading Central, and also the alternative, the other direction, what's possible, and some basic rationale in terms of technical analysis on the chart. Also under analytics, this tab on the left of the personal area, you can get market news, which when it fancies loading is where you can find a variety of different articles about all major and many minor forex pairs primarily, but also sometimes gold and oil. You can find some of the latest news and also some details about it there. And also very happy to report that the new economic calendar is live. If you've been joining this live stream a few times at the end of last year, I would have teased this of course a few times, the new economic calendar coming, and now it's ready. So that's great. I think that's really exciting. You can see that you can change the time zone. You can choose when, what period you want to cover. You can also filter by country, and you can filter by the level of impact of the news, and you can also choose between economic events and holiday events. And another great thing about this, I think, is, let's take something relatively more important, is you can also click on the chart for any of these releases to get the actual and the forecast releases over quite an extended period of time. You can see quite far back in the past, so that's great. I'm personally feel really excited that we have a new more functional economic calendar from Exness. That is absolutely awesome. I think it's great. So hopefully enjoy using it, and yeah, I just want to say big congratulations to the team who's working on that. Obviously they're working quite hard for a while, so it's good that we now have this available. Covers all of the most important currencies. Earnings calendar not yet, so we'll still use some other sources to look for earnings, but this I think is a great step in the right direction and some big improvement for the products, so that's really awesome. That's great. So what we're going to be doing today firstly is we're going to be looking at some of the more important releases coming up this week, and some kind of like overview of what's going on there and what possible effects we can expect in markets from them. And we'll also be looking back at any previous releases. We'll be looking at some charts. If you have any specific questions about anything, please by all means go ahead and ask. I know we have a question about will gold stop rallying, and we will get to that very quickly. We're just going to briefly look at what's coming up this week, and then we'll go straight into gold, and we can cover the other stuff later. So some of the most important releases that we have coming out this week focus on the United Kingdom. Firstly, we've got the British Job Report, which is coming out on which came out today. So we'll look at the British Job Report shortly, since that has already come out, and also we're going to be looking ahead at British inflation tomorrow. So the British Job Report today, I think we can say, broadly speaking, was fairly negative. The rate of unemployment, no, that's neutral for November. But I mean, broadly speaking, in that the payrolls have gone fairly significantly down, more than the forecast, and claimant count changes. It hasn't gone up as much as forecast, but still it's gone up by quite a significant amount. Whereas average hourly earnings have actually beaten the forecast for 3-month average of the year, including bonus, that's to say. So, but broadly, I would say it's more or less negative, since we have the total payroll change is more than double. The decline is more than double what had been expected. So broadly speaking, that's negative. We might expect to see possibly some pressure on the pound, but we, I think, want to look quite closely at British inflation, which is coming out tomorrow. And right now the forecast is for 3.1%, but given that we had for last time, we had quite a significantly lower release. Don't know why it's showing that, but we did have last time quite a significantly lower figure than what had been expected. Then it's possible we might see something like that happening again. So let's see how that happens. That might be something that's quite interesting for the pound. If you're trading the rand, then you've got South African inflation as well, which is coming out tomorrow. Japanese balance of trade related data, and the Australian job report on Thursday, so possibly focusing on these. And American final GDP for the third quarter, really important release, because we had quite a significant positive surprise from American GDP last time. Last time we had been expecting that's the final. Sorry, last time for the advance, we had been expecting that it would be a fair bit lower than that, right? Let's say it would probably be like about 3.3%, but it's actually a full percent higher than the consensus. So it's something that we want to watch out for quite closely to see whether American GDP might possibly be revised down. So let's see how that plays out. And we also want to look at the Bank of Japan's meeting, which is on Friday. So that is very unlikely to have any kind of significant change, but it's possible that we might get some hints on intervention. So that could be something that's important if the Bank of Japan hints that it's going to be intervening in currency markets in any way, something we want to focus on quite closely. So let's look a little bit at oil, at gold, because we have a request for that. And who was it who asked that? Sachin 96,200. I would say that eventually, yes, it will probably stop going up, but at the moment it's not that likely for that to happen, because overall we have pretty supportive fundamental environment. FedWatch, we're looking at the Fed like at least cutting once this year and most likely twice. More details on that shortly. And we're also looking, I think, fairly closely at Davos this week. And but going into that, I think we have a fairly strong impression that there's some souring and some risk in relations between the USA and the EU. Intra-NATO relations, traditionally quite strong allies. You've been reading the news, of course, recently about Greenland. And we have, I think, underlying concern to some degree of the independence of the Fed. Because we saw earlier this month, threats of legal action against Jerome Powell and the Fed in general for related to the renovation of the Fed's headquarters, when various people would say it's not really about that, it's about Donald Trump just wants the rates to be cut. That's something that's possibly concerning, but we need more details about that to know more. So there isn't really very much fundamental kind of pressure or sentimental pressure to push gold down. Just the main really issue here I think we have, Sachin, is how do we find a reasonably good entry? And if you're here last month or the month before that, then you'll be familiar with me saying that. It's a little bit difficult to find a good entry for gold right now. But one opportunity I think potentially is to think about things a bit more short term, and just try to ride any relatively big candlestick that you see. That's one possibility. But I think equally, my preferred approach would be, wait for the price to be at least slightly lower before actually doing anything about it. So I probably want to try that. And I mean, I would just stress when I'm setting the Fibonacci here, this is like really very approximate. I'm just setting approximate Fibonacci here. I'm not. These are not meant to be specific areas, right? So if we look at that Fibonacci extension based on this movement from around late summer last year until the beginning of the fourth quarter, most of the third quarter's movement, basically, then I mean, it might be possible to expect the price to start retracing sometime soonish. I certainly think to enter from here and set your target around 5,025 is going to be a bit too aggressive. That's my personal opinion. For me, you don't necessarily have to believe what I'm saying. Do your own research. It's just my view is that it would be a bit too aggressive probably to do that. So I would probably prefer to wait for the price to move a bit lower, possibly test the 20 SMA around the 50% Fibonacci extension, and then take it from there if I was doing a relatively longer term trade for CFDs on gold. But I think, I mean, a lot of this really depends on what is the outcome from Davos. It depends on how various other news factors are going to play out. But I mean, the short answer to your question, and we can analyse this in more detail. We look at the technicals in more detail later, if anybody would like. Just want to get through some material first. But the short answer, Sachin, is I think no, probably won't stop rallying for the moment. But the related problem that we have as traders of CFDs is that it's potentially quite difficult to find a reasonably good place to enter. To enter. So that's possibly one issue. Yeah. So, right, where were we? We were looking at the economic calendar, right? So that's some of the important things on the economic calendar, right? Let's look briefly also at the earnings calendar. I want to look back firstly at previous week. In that overall, I would say that we had a fairly positive earnings season so far. In that last week is pretty much dominated by banks, almost all of which, I think with the sole exception of Bank of America, have beaten the consensus at least slightly for EPS. So that's basically good for indices. It's obviously good for the individual shares when we get a positive start to earnings season. But I mean, for the shares that are usually most relevant to us as traders of CFDs, we're looking primarily at this week and then at next week. Netflix, very, very big share releasing after hours today. So let's see. I mean, the consensus, of course, for EPS is extremely low relative to the previous, partially to do with the split. But if we do the maths on that, then we're expecting it, I think, to go up slightly, to go up like a reasonable amount, right? But after accounting for the fact that it's split, the stock. And we're looking ahead next week, which I think probably Andreas will be discussing in more detail if he's here next week. Looking ahead next week to Microsoft, Meta, Tesla. And Apple is on the 29th on Thursday. Also Amazon on the same day. So these, big tech and related shares. Also ExxonMobil, very important share right now, given what's happening with oil. Netflix today, and then primarily looking forward to some major shares next week. Not too many major shares this week apart from Netflix that affect us as CFDs. So I also want to look back, because we're going to talk a little bit about monetary policy. We kind of have to. But I want to look back briefly at the release of... No, sorry, I don't want the earnings calendar right now, do I? I want to look back briefly at last week's data from inflation from the USA. Okay. So last week we had the American inflation coming out, and it came in as expected, but I think it's kind of significant that it didn't increase significantly. In that, it's also possibly significant that it wasn't lower than expected, because much like for the British figure, we had quite a significant lower surprise for the release of inflation for November that came out around this time last month. So it might have been possible to see it going down again more than expected last time, but that did not happen. So broadly speaking, I don't think that really changes anything much in terms of what we expect for the Fed, but certainly it looks, for the moment anyway, like we're not getting any kind of sustained uptrend in inflation. Seems to be holding fairly happily around this area of 2.7 to 3%. So that's broadly positive for the Fed in terms of cutting rates, and I would argue it's probably broadly positive for gold as well, even though right now we have the situation where rates are a fair bit higher than annual headline inflation. They're likely to remain that way for a while probably, but that is something that remains fairly positive for gold, and that inflation is not strongly rising. Fed is definitely not expected to be doing any tightening of monetary policy anytime soon. Definitely the trajectory for the Fed is downwards. So we'll look at some questions in a minute once we have looked briefly at CME Fed Watch. So pretty much foregone conclusion we've got for this month, pretty much guaranteed large majority, overwhelming majority of traders expecting the Fed to hold this month. And also next month we have a pretty big majority, and we have a moderately large majority for April as well. First time we have a majority of traders expecting at least one cut is in June. That's kind of significant in that this has moved back compared to this time last month. Around this time last month, we had a slight majority of participants expecting that there would be at least one cut by April, by the meeting at the end of April. That's now moved back to June. And then if we go further ahead, I would just stress that when we go this far ahead, we go to December and it's currently January, then this is a lot less likely to be very reliable. Right? I would just want to stress that. But we have again moderately significant majority of traders expecting two cuts by the end of this year. So it's around 62% approximately, give or take, which is expecting at least two cuts by the end of the year. So let's see how that changes. We want to see, of course, when we're looking at the Fed's meeting next week, which Andreas is going to be discussing in more detail, assuming he's doing the one next week, then we want to be thinking, I think, about what kind of hints are there as to inflation? What does the Fed see as a trajectory of inflation? What does the Fed see as a trajectory of the job market? I think is very, very critically important, since we've had generally much weaker releases in the job market recently. And we can discuss that, of course, in more detail. If anybody would like to do so, that would be, of course, absolutely fine. We can discuss that more. So let's look at where we are now. Alan Moran, I love Exness. That's great. I love Exness too, Mr. Alan Moran. I'm glad that you love it also. You could tell us what you love about Exness if you would like to share. That would be cool, right? And then Irene Sautu says, I am a successful disciplined Forex trader. Okay, that's great. Good for you. God increase you. Very good. That's great. If you want to share anything about your success, then that's great. Or if you want to ask a question, please by all means ask a question. Yeah. And then Sashin says, what are your most preferred instrument pairs for trading? Could you explain your edge in quickly? Yeah, I mean, I wouldn't say really, to be honest, when I have that much of an edge. I just usually manage to be a little bit patient and manage to be able to cut losses quite quickly. Sometimes it is really that simple. Preferred pairs to trade for CFDs, probably pound Kiwi dollar is one of them. Why? Because it generally doesn't move in really strong trends. There are no numerous exceptions to that, of course, but much of the time when I'm trading it, it's not moving in a very strong trend, and yet it's relatively quite easy to predict. In fundamentally speaking, that is, in that I'm watching the British news a lot and usually following New Zealand news fairly actively as well. And I mean, it has a relatively easily readable technical structure, usually tends to respect support and resistance. So that's one of my favourite pairs to trade. Also really like to trade pound yen in most circumstances. Right now, not so much, because it has been in a very long trend, which I think is possibly getting towards exhaustion. What else do I usually like to trade? Don't usually like to trade oil as a CFD, but sometimes I do in some situations. Eurodollar, of course, everybody's favourite. Well, not everybody's favourite, but among everybody's favourite, let's say, for obvious reasons, liquidity and so on and so forth. Gold also is quite good. I just wouldn't say I really prefer to actually trade gold maybe as much as Forex, because price of the pip is a lot higher. It does have a relatively easily readable technical structure in many cases, that's true, but it can often react quite strongly to meetings of central banks and other news. So it's just like a bit more volatile. It's a bit riskier than many forex majors or large miners. So gold, it's up there. I just wouldn't say it's one of my top ones. So hopefully that answers the first part. And could I explain my engine quickly? Well, it's basically just a modified version of the 6 rules. In that I usually try to enter during the main session, follow the main trend on the 4-hour and daily charts. Try to avoid buying and overbought, selling and oversold. Always use a positive ratio of reward to risk without any exception whatsoever. And but try, where possible, to trade only when one currency is strong and the other is weak. Where possible. Sometimes, of course, you can't do that, but where possible, try to do that. But I wouldn't really say that's an edge. Sachin, who asked that, it's not really an edge. It's a pretty simple approach, really. Just applying that consistently, while also I think having a kind of background of being aware of potential risks in some situations, I think has served me reasonably well. But if you want somebody to talk about edge and like life-changing profits and so on, this is not me. You're not going to get that out of me, I'm afraid. I haven't made a life-changing amount of money at forex. But I mean, it works for me reasonably consistently over time and certainly helps. So that's good. I just wouldn't call it an edge necessarily. Session says Trump is unpredictable, so gold is safe as far as Trump is president. Yeah, I mean, there's definitely some truth to that, Session. Yeah, you're right. Trump is totally unpredictable. I mean, he's predictable in the sense that you cannot predict him. It's predictably unpredictable. That's absolutely right. Yeah, and generally in the first term of Donald Trump as president, also we saw overall pretty strong gains for gold. Feels like a lifetime ago now sometimes, pre-COVID, but it was overall like really positive time for gold. And I mean, Trump 2.0 I think is different in some respects in that it's a lot more aggressive. You can see over this term there's actually follow-up behind the rhetoric, like rhetoric against Venezuela, for example. We saw an actually follow-up of captured the president and the first lady of Venezuela, taking him to the USA for trial for, I don't know, let's not comment on politics, but it's certainly more aggressive, right? So let's just do one more question and let's go back to what else I wanted to talk about. So hopefully that answers your question, Sachin. Fingers crossed. If you'd like more details, of course, happy to provide more details, right? Matthias Chidodo says, what is your favourite trading tool you may recommend? Well, that's a great question, Mr. Matthias. I would say overall, probably my favourite trading tool would be a good economic calendar, like Trading Economics, or Exness's new economic calendar, as I was just saying a few minutes ago, has become, I think, a lot more good now that they've released the new version. Still has some things to be ironed out here and there, but this is way better. This is a lot better than what it was like before. So that's great. But I mean, I wouldn't necessarily pick just one. I wouldn't pick necessarily just one trading tool, because obviously you need more than one. What's my favourite indicator? Oh, there's so many to choose from. But I would probably, emphasis on probably, go with Bollinger Bands. Because it gives you a lot of easily readable information that you can do a lot of things with. But I mean, again, it's very difficult to pick just one. It's a great question there, Mr. Matthias. You could share what's yours. What's your favourite? That would also be informative. I just think it's a bit unreasonable to pick only one. Even just one indicator. I think it's always good to use a combination of indicators. It's always good to use a combination of fundamental tools to have multiple different favourites. Yeah. So let's talk a little bit, as I was saying earlier, let's talk a little bit about American job data, because that's something that's kind of been in focus for some narratives lately, in that we've seen the unemployment rate go up quite significantly. Well, not that significant. We've seen it go up to some degree, let's say, since around this time last year. We could certainly say that. It's not that much, but it has gone up by nearly 0.5% since around this time last year. So that's something that's possibly significant, showing that the job market in the USA is slowing down, right? And I think we can also say that overall, there's a clear, obvious slowing of new jobs being added, since around May of last year. And one of the confounding factors there, of course, is politics, in that there's been significant crackdowns on illegal or questionably illegal employment and various other things. Again, don't need to get too deeply into politics, but I think even excluding for that factor, we obviously have some slowdown in the job market in the USA, and that's one of the things that contributes to the Fed's relative confidence in terms of cutting rates further. Rates pretty much guaranteed to go down at least one step, probably two steps this year, depending upon what data is upcoming. So, but at the same time, and what I think is really interesting, and I commented on this. Commented to somebody else the other day, but GDP has not really declined all that much, based on the first estimate at least. First estimate that we got just a couple of days before Christmas last year, 4.3%, way better than the consensus, so much better than had been expected for GDP for the third quarter, which is quite strange because the GDP calculation has a fairly significant component from employment, from job data. So if you're seeing this significantly weaker job data, you wouldn't necessarily be expecting GDP to be going up. That's a little bit odd. But I mean, consumer spending has been pretty robust in the USA. So I mean, of course, that's a good thing in terms of various things, shares and US dollar and other things, and sort of negative for gold. But I mean, I think given how established the narratives are for gold and the trend for gold, it's not something necessarily that negative for gold. And that, I think, is one of the things that makes GDP this week really particularly important, because I think, and of course I might well be wrong, but it's just this is just my opinion, I think it's very likely we're going to get some kind of revision to this. I don't think it's actually going to be 4.3%. But then equally, if it comes out, the final release for the third quarter of last year, and it comes out higher, which I think is quite unlikely, but if it comes out higher, then you might see a significant short-term challenge for gold. Just because it's strange, and that shows like really unusual robustness given the situation. But then equally, speaking about the situation, this recession that everybody's, or not everybody, but let's say many people have been predicting for a number of years now, doesn't show any significant sign of materializing for the moment. Recession, I mean, in the technical sense of 2 consecutive quarters of GDP declining. We're not seeing any indication of that happening for the moment. Usually, although GDP of course is a lagging indicator, usually if we're coming up towards a recession, we expect to see GDP gradually or sometimes suddenly going down, declining fairly strongly. Whereas I think it's very unlikely within the next couple of quarters we're going to see GDP going from 4.3% down to negative for 2 consecutive quarters. Not impossible, just something that doesn't seem very likely for right now. So recession narrative is not something that we're particularly focused on right now. Yep. Sashin says, thank you for your answers. That's fine, you're welcome. Thank you for your questions. Sashin says, my edge is market structure and supply-demand based entry criteria for targets, left side market swings, or liquidity with risk-reward ratio above 1 to 3. Good, that's nice, that's a great ratio. But now only adaptation to process is what I'm trying. Yeah, that's good. It's great to have a process, yeah. Thanks very much, Sashin, for the comment. I think that's informative for everybody to learn. Yeah. Very good to have such a positive ratio of risk to reward like that. I mean, we can't necessarily do that if we're doing very short-term trading, like scalping, But as a day trader, if it's possible, and if as a swinger position trader, it's absolutely awesome to have a ratio like that. Or position trader sometimes even higher. And yes, very good to stick to your process. I think makes the chance of success a lot more likely. Yeah, a lot higher chance of success if you stick to your process. So thanks very much, Sashin, for sharing. Yeah, and if anybody else has any questions, then please by all means go ahead and ask. That would be great. If you have any questions, we'd be very happy to answer them. So I think let's look at a few charts, and if anybody would like to go into more detail about any aspect of the fundamentals, then of course that would be great. Happy to do that, but for now let's look at a couple of charts. So gold, I think we covered a little bit fundamentally wise, and I think we can talk a very small amount about the technical aspect of it. So the main challenge I think for gold right now, as probably Andreas was discussing last week and we discussed last stream last year as well, is it's just a bit difficult to find an entry as a longer term trader when you're at an all-time high right now. Let's just bring a slightly lower time frame here. Not that I would recommend you to trade on this in 3 minutes. So you're basically at an all-time high right now, all-time high. So you don't really want to be entering there with a market order usually as a swing or a position trader. Usually want to wait for the price to be lower, or possibly try to exploit a breakout in some situations. Here I'm not sure that's going to be a great idea, but perhaps it might work. So I mean, what I would do in this situation, not on this account, and I would also stress it's not a recommendation to trade or to do anything, is we could find here this fairly long tail on this candlestick from the 16th of January. So we can think, okay, if the price is going to be moving down, then possibly it's going to be testing something in this area. Maybe we can buy in around 4,550. In that case, I think probably to make this reasonably worthwhile, you probably need a reasonably aggressive target. So, too much, right? Okay, sorry. Let's go with. It's also like extremely aggressive target, but let's see, right? And where would we set our stop if we were to be entering there? I think probably for 350. But what kind of ratio are we going to get here? Not a great one. Not a great ratio at all. And I mean, would I do this on this account? Well, perhaps obviously not, because as you can see, I would stress this is just a demo account, but we have a relatively small amount of money here, and we're going to be losing large majority of the balance if we take this trade and it hits the stop. I'm just not sure really right now where we go with something a bit more conservative than that. 4485 is possible, yeah, 4485. And we can make it slightly less aggressive in terms of the initial target. So let's try 4750, which is a little bit more like it, but still I think the loss is really far too high for this particular account, so I'm not mad on that. But I would stress this is a demo account. It's not a live account. It's not a recommendation to make a trade. It's just for informational purposes only. Whereas for euro dollar recently, I think we've seen some like fairly positive movement overall. I mean, one of the main things that we're focusing on, and you can read of course more about this in any news that you might want to read, is the current debacle over Greenland and what's going to be discussed at Davos, the World Economic Forum this week. Presumably Scott Bessent, the Treasury Secretary of the USA, is going to be having at least some meetings with finance ministers, other senior politicians from the EU and EU countries, I would assume, over the next few days. How much are we going to find out about that? We don't know yet, of course. Perhaps not very much, I would expect. So let's see how that plays out. I think that's one of the things. And I suppose one of the important points here possibly is that USA has threatened tariffs on Europe, regarding Greenland. That's true. But there is the possibility that this is just a game he's playing 4D chess. He wants the Europeans to invest more in the militaries. He wants them to put military forces in Greenland because he's worried about a Russian invasion of Greenland or something like that. That's possible, maybe. And tariffs is just a threat to get the Europeans to do what the Americans want. I think that's maybe giving a little bit too much credit to Donald Trump's intelligence, but we said we wouldn't talk about politics, so let's not talk about politics. The important thing is that on the chart, we can see that Eurodollar has bounced pretty successfully from a fairly notable low of about a month, and it's also moved up out of oversold with the crossover of the slow stochastic. Reasonably good buying volume here. So that's why I think this might possibly have some kind of staying power at this bounce. The main obvious hurdle, I think, would be around 118. Obviously would be, I think, quite difficult for the price to break through there. But if it does, then probably 119 would be the next clear target, I think. In the overall, we don't have a clear directional trend right now for Eurodollar. We have a sideways trend, basically, for Eurodollar. So I would probably be inclined more towards buying, but over the relatively short periods. Right, so I would certainly think about doing a market order in this case. I would stress not a recommendation to trade. It's just my opinion. It's just a possibility. It's meant to instruct the idea of using a reasonably good ratio, and we might set a stop. We don't get a very good ratio if we set the stop all the way there. Yeah, possibly around the 200 SMA. That's a little bit close. 116.5. We get a reasonably good ratio from doing that. And since the volume is fairly low, then it wouldn't be too big a loss. You just might have to be sitting on that trade for some time. I think it is quite a good technique. Who was asking that before? Yeah, Sachin. I think it is quite a good technique, although I wouldn't make it a strict rule, to use an area within a wick or a tail as a target. That can often work quite well. And if it looks like there's going to be a breakout, that's fine, no problem. You can move the target up. You can start. You can use a trailing stop in that situation, possibly. That's nice. It's possible to do that. And whereas for silver, any questions about Eurodollar, of course, by all means, please go ahead, or any other instruments you want to be analysed. Anybody who's watching, that would be great. Please, by all means, ask your questions. That will be great to answer your questions, since it makes a live stream, more useful, more engaging, and so on. So with silver, I mean, overall, I definitely favour this less than gold. Primarily because it's just gone up so much in really such a short amount of time that it's difficult to find a reasonably good entry unless you're happy to just say, all right, screw it, whatever, let's just buy in, right? Hang the overdraft and so on, and then just see what happens. But then, of course, if you were to buy in here, then it might end up looking like this for a while, and then, of course, it looks like that for a while. And you can see this particular candlestick, that's from the 29th of December. It's lost between the high and the close. It's lost nearly $10. It's from between high and close. It's gone more than 10%. Do you really want to be in there with this when it's doing that? Some people do. That's fine. I personally don't. I don't want to risk being in for something like that, and also don't really want to be setting a very tight stop because maybe it's just not very efficient to be doing that in this context. So that's why I personally would not really go near silver. If I was forced to make a trade, I would of course buy, but for the moment I would just leave it until it calms down a little bit. Dollar loonie I think is possibly a good candidate for trading right now, in that we've got some upcoming data from Canada. We've got Bank of Canada's meeting next week, and we've got rising inflation from Canada, and at the same time we've also got fairly active movements on the chart of crude oil. I would actually probably add dollar loonie, who is asking that, Sachin. Yeah, I would probably add dollar loonie to my favourite instruments to trade. Maybe not the top one, but it's fairly up. It's up there with among the favourite instruments to trade, because traditionally Canadian dollar, or the loonie we usually call it, has a fairly strong correlation with crude oil. So in some cases that can make this easier to trade, and of course the profit or loss per pip is significantly lower than it is with crude oil. So other things being equal, it's less risky to trade this compared to trading crude oil. So I think that's one advantage of it. So right now, I mean, I definitely think the overall impression for me is it's probably going to decline for a while. It did do quite a successful bounce late December, early January, so that was of course a nice opportunity. Whereas right now I think maybe things look a little bit more negative given what we were discussing earlier about the dollar, and I think that broadly speaking crude oil does not look negative anyway. It doesn't look super positive, but certainly doesn't look very negative. We'll come on to crude oil itself in a minute. The only possible danger here would be this is a confluence of three moving averages. It's the 250 from bands and 20 moving average. So the price is obviously still testing that right now, and doesn't show any immediate indication that it's going to break through. So it's a bit questionable, but I would probably I would try to sell this here, and maybe set a fairly, relative to Forex pair, aggressive target somewhere down towards the previous lows. Maybe around 137ish. So let's try that. And I would just remind you, demo account, not a recommendation to trade. And set the target roughly around 139. And then let's see what kind of ratio we get. Not fantastic, but it's something that I would maybe try. And if it looks like it's breaking through this area, then possibly move the target further. Might try that. Might try moving the target a little bit further, because that's one case where they might have a reasonably significant opportunity for an extension. So right now, welcome Joyce. Joyce says better late than never. Joyce from Kenya, one of our regular attendees. Welcome back, Ms. Joyce. Wish you a happy new year. Nice to see you again. We did cover gold already, but we will be coming back to cover gold again. Don't you worry. Yes, we'll talk more about gold in a minute or two. So let's look at pound yen. Because basically, right, let's cut to the chase on this so that we can talk about gold again, because I know everybody's more interested in that. The long story short is that lots of participants, that individual traders, and also banks, analysts, media, and so on, are expecting that around 160ish yens for dollar yen. This is the trigger zone for the Bank of Japan and the Japanese government, possibly, to actually do something and intervene. So that's why you might well see if dollar yen is going up to around 160ish and holding there for a bit of time, then there's going to be an intervention that is also going to affect pound yen, and pound yen is also going to tank, at least in the short term. So that's why, I'm not mad on this at all, because if we previously saw somewhere 2 years ago, the last time there was actually a direct intervention as opposed to a threat of intervention by the Bank of Japan, it really quite strongly lost around midsummer of last year. And now, of course, it's higher than that. It's reached higher than the previous high, because Bank of Japan doesn't necessarily particularly care about what the rate is of pound yen. There's not that much bilateral trade between Britain and Japan, relatively speaking. Whereas, of course, it's critical what the rate is of dollar yen. So that's why possibly this is a better candidate for trading. You just obviously would need to be aware of the potential for there to be an intervention. And where exactly you would set your target, I have no idea. I think that would be quite a difficult one. But let's try to figure it out together. There's no obvious place to be setting a target based on the chart. We could use Fibonacci. We could certainly set up Fibonacci, but let's not do that for now. And the chart doesn't go back that far from Exness. So let's look up a chart on TradingView, and we can get some possible idea of what to do. Since these recently, pound yen has reached highs, I think, of about 17, 18 years approximately. Significantly higher than the high pre-Brexit referendum. It's pretty notable. And also it's the highest since the global financial crisis. So one obvious pretty long-term target would be 250. That really takes me back, doesn't it? 250 for pound yen. But you never know. Maybe in the longer term that's going to happen. And monitoring to see what is the overall direction in terms of monetary policy. There's obviously an extremely aggressive target, 250. But let's just look at that out of curiosity, rather than anything else. For 0.01, if you set your target 250, it makes you nearly $240. Okay, look at that. But I just stress, if you were to actually do that, you'd probably be sitting on that trade for a long time, potentially. So maybe it's not ideal for a trader of CFDs. Right, and let's look briefly a little bit at crude oil. So last week we gave the idea in the trade of the week. It's been rebounded now to trade of the week for crude oil, and happy to report that we got it right, in that it did hit $62. So that's great. And you can get trade of the week in here under videos on Exness's YouTube channel. And where else can you get it? Here you can get it in a playlist. Here's all the trades of the week in order. Obviously the old ones are not going to be relevant anymore, but you can get it in here, the latest ones. So that's good. Nice when we get it right. Also, of course, we own up when we get it wrong. But as for whether it's going to test that again, I think it's kind of questionable for various different reasons. In that we have generally moderate concern over oversupply around the world, right? And we also now have less concern about disruption to supply from Iran, since that has for now at least cooled down. The possible revolution and certainly civil unrest in Iran has cooled down, and other countries have kind of moved the focus away from this. Not too much threat of tariffs on trade partners or anything like that, or at least this is not in the focus right now anyway, let's put it that way. So it's probably unlikely to retest this area, but I think also it's very questionable whether the price is going to move significantly downwards. One of the main narratives that was driving the price initially downwards in early January was the idea that, okay, now we have a government change in Venezuela, then Venezuela is going to start pumping more oil more or less immediately. I think that is basically a non-starter, to be quite honest. I would stress that's just my opinion. But it's a non-starter because infrastructure and generally more or less everything in Venezuela has been underfunded for a long time. So even if they wanted to flood the market and crash the price of their main export, which makes nonsense. But even if they wanted to do that, I don't think they would be able to do that. Would be able to significantly ramp up production in the very near future. I might be wrong about that. In the future, in the further future, of course, certainly we could expect to see crude oil production from Venezuela increase. Let's actually just look at that. Have we got time? Yeah, we've got time. Let's look at that, and then I'll look at the question. So Venezuela crude oil. Yeah. And we look at what it's been like over the last 10 years. Like, and this is not peak either. This is already, I think, off this chart, but we're not subscribed to this, are we? No, we're not. Anyway, off this chart is the peak, and it's like still fairly significantly less than half, and certainly doesn't look like we're going to start to see Venezuela moving back to producing like 2.5 million barrels of oil a day. No, not in the near future anyway. Something maybe years, possibly even decades ahead. Let's see. It's something we want to continue to monitor. So that's why, anyway, long story short, I think fundamentals for are kind of broadly neutral at the current price, and I think the technicals for various respects are also fairly neutral, just slightly would favour buying more. I just wouldn't be desperate to jump in and buy anytime soon, because I think from technical perspective, clearly this move up to 62 is not happy with that. Sentiment. Traders' demand is obviously not supporting that really long wick there around the area of the 200 SMA. We only just hit the target. $62 was the target for the trade of the week last week. We only just hit it. So, I mean, certainly doesn't seem to be much demand to push above there for now. Just maybe want to wait for the oil status report, which is coming out Wednesday, tomorrow. And we also want to, I think, look at the American regular stocks and various other things, what happens in terms of threats to tariffs and so on and so forth. Anything else in particular I wanted to analyse here? No, not for right now, but we can do more in a minute. Right, Session says, what are your 5 do's and don'ts for trading successfully? That's a good question. What are my 5 do's and don'ts? I'm not sure whether we'll go with 5. I don't have a strict list, but just off the top of my head, I would say don't be greedy. In that, like, within that, you need to try to start with realistic expectations. Keep going with realistic expectations. Know when to say enough is enough. If you've made a nice profit, especially, just that's fine. That's good for this month. I would say another definite do is try to balance amount of research with taking an action. Don't be paralysed with doing too much research. Try to take some action. Do certainly start small, and in my case I prefer to keep it small. Have experimented with trading relatively large amounts, but did not enjoy it at all. So for me at least, it works not to see too many zeros at the end of trades. Prefer to just see a couple of zeros at the end of trades, including the profits and losses. That's fine for me. Do stay calm. When you suffer a loss, you try to be like methodical about analysing what went wrong and what to do next. Do, I think, find the correct technical place for a stop first, and then decide on the volume, which is a little bit more niche, but I think that definitely works. So, like, for example, let's say if we had an account 100 times this, we've got like $26,200 in this account, right? And we think that the appropriate technical place for the stop is roughly around 56ish, let's call it. I mean, we certainly can't trade like 50 standard lots because we would lose too much. We need to set the size a little bit smaller. So I think size is probably one of the last things to set for a trade if you're following that kind of tip, that kind of do. That's just off the top of my head. If you want me to come up with a good list, maybe that would be a good article. Because if we go to this is relevant to the question session. You can go to Exness Insights. You can find actually quite a few articles about this sort of thing. Some like do's and don'ts of trading successfully. Just need to probably go to psychology to find that. Yeah, this is a pretty good article actually from Tomislav. There's various, great tips I think in here about do's and don'ts. And generally browsing this, you can find quite a few essential learning. You don't care about that, but you can find quite a few ideas about that. I mean, I don't have necessarily a strict 5 do's and don'ts. That's just off the top of my head. Hopefully that gives you some idea. Yeah. And then Suleiman Shah says, what do you think of funded firms? It depends on the firm. I mean, funded firms, from my personal experience, you send them a statement from MT4 or MT5, and you say to them, I want to be funded to become a trader. And then they say, okay, we'll give you this money and you trade and we take a cut of the profits that you make. In principle, I think it's quite a good idea. In practice, I don't think it's a very good idea, or at least that wasn't. I mean, for the people I know who have done this sort of thing, because in some jurisdictions the regulation is not tight enough. Let's not go too deep into it, but I mean, I think if you're considering going for trading with a funded firm, you need to think about, well, what happens if you actually make a loss? What's the fee in that case? Do you need to pay back all of the capital? Do you need to pay it back with interest? What happens? Because sometimes you do make a loss. And if it's your own money, then of course it's bad to make a loss, bad to blow up an account. But at the end of the day, if you've got your own money, like 1,000, 2,000, 3,000 euros or whatever, then you can make it good eventually, right? Whereas if you get funded by a company of like 30, 40, 50,000 euros and you blow it up for whatever reason, then you have to pay it back, you have a problem, obviously. Hopefully that doesn't happen, but depending upon the regulation, what kind of protections you have there, and what kind of supervision they have to see what you're actually doing to make sure you don't blow up. These are all, I think, questions. So I mean, I'm not a huge fan, although of course I know for some people they have made it work. They've got, they've gone to a funded firm, or they've somehow got funded to trade, not necessarily through a firm, through crowdfunding in some cases, and it's worked out fine for them in some cases. But then in some cases, of course, it has spectacularly not worked out fine. So I think there isn't a simple answer. Thanks very much, Mr. Suleiman, for the question, but there isn't a simple answer, unfortunately. I mean, I think the best thing is to do some research. Honestly consider like what will happen if it goes wrong. Just I think be honest with the answer there is important, and take it from there considering personal circumstances. I could just talk about my personal circumstances. I obviously can't give you an advice or recommendation. I could just highlight some things that maybe you'd think about, and hopefully that answers your question, Mr. Suleiman. Yep. And Trading Guru 44 says gold, and also we want to analyse gold for Joyce, naturally. So let's look back at gold. Well, as I was saying, we were looking at this a little bit earlier in the stream, right? And I was talking about, among other things, right? Davos is coming up this week. We're expecting probably Scott Bessent, who is the, I don't call him the Chancellor, what do they call them? Treasury Secretary, in the USA, is probably going to be having at least a few meetings with European leaders. So let's see what's going to happen. Are they going to be insulting each other and screaming at each other? In which case, maybe you get some tariffs and more kind of instability there, positive for gold. But let's see what happens with that. No really super crucial data from the USA this week except for GDP. PC and personal income, personal spending, yes, important, but GDP I think definitely is the focus on GDP, because as we were saying earlier, we got a really very surprisingly positive release from that last month for the preliminary, for the flash release. So I personally would expect this probably to be lower, which might be positive for gold. But in the unlikely event that GDP comes in significantly higher, then I think that we might see gold possibly going down significantly. And there's various other factors, there's other geopolitical factors and other things. I would suggest Trading Guru 44. You want to know more about that, please watch the previous part of the stream here, because we discussed that in more detail. And I think overall, what we did, or what I thought about doing anyway, let's say, is using a buy limit for a lower price. For gold, since I just don't really want to, as a swing or position trader, or frankly even as a day trader, don't really want to jump in here because we're pretty much at the all-time high. So not a good idea from my perspective to be buying in here. And we just thought about finding a reasonably good ratio. As you can see here on the screen, not a recommendation. Remember, this is a demo account. It's just based on what I thought was looking like a relatively strong, relatively large tail here on this candle from the 16th of January, and the possibility that the price maybe is going to move up longer term. It's almost certainly going to reach 5,000 sooner or later. It just might be later rather than sooner. And the main concern, I think, for the moment really is overbought. It's very, very strongly overbought. So I'm not expecting an immediate kind of breakout up. I would probably expect it to retrace a little bit first. And Fed-wise, we talked about, seems to be most people expecting two cuts by the Fed this year. So broadly, I think it looks positive for gold. I just personally would definitely not buy in here. I personally do not think that is a good idea. Speaking as a swing trader or position trader, it's not a recommendation. That's just my personal opinion. It's just what I think. It's usually much riskier to buy the tops. That's the conventional wisdom, right? So thanks to your question, Trading Guru 44 and Ms. Joyce. We preempted her. I knew she was going to ask about gold, so we can preempt there. Thanks for attending, Ms. Joyce. Great to see you again. So what I would like to do now, because I think we're just about getting to the end, what I would like to do now is, if anybody has further questions, please by all means go ahead. That would be great. If you have any more questions, please ask them. But before that, I would just want to plug our Trading Talks podcast, where we go into various of the questions that we've discussed here today. We go into these in more detail. We talk a little bit about strategies and planning, and some of our own personal experiences in trading, mistakes and successes, and what we've learned from them, and also Trade of the Week. This is, I think, a really good, useful video because for many traders, because it gives you a fairly specific idea for a trade. It's not a signal or a guarantee of success. And overall, these ideas have a pretty good hit rate. For last year was 76%. So that's really good. And hopefully we should have a video about the results of the Trade of the Week coming out soon. So maybe you would like to watch that to find out more. Just remember that it's not a signal, it's not a guarantee of success, it's just an idea for a trade. And you always need to do your own research, manage risk. And you want to follow me on X, it's Exness, X formerly known as Twitter. So I post some things here, post some of the charts from TradingView that I'm sharing, some kind of opinions, discussions and so on. That would be good if you want to follow here. And you can also follow my colleagues, the various colleagues of mine who are on here, including but not limited to Stan and Andreas. Andreas, by the way, should be doing, I think, probably the live stream next week. So this time next week, Andreas is doing it. And there are various other colleagues from the strategists and other teams who are sharing various ideas. For example, Terence is usually focusing more on South Africa and South African instruments. And let's say, for example, Inky, not always, but much of the time, is focusing more on shares, and is focusing to some extent more on Chinese shares. So you can follow all of these people, and maybe that's going to be interesting for you. And on TradingView as well, so you can follow us on TradingView. And hopefully see you again for... so we've got another question, right? Sorry, we've got a question from Matthias Chidudo. How do you analyse US tech? Yeah, let's look at that, definitely. We could take more time if need be. I mean, I think generally for indices, as you're saying towards the start, but generally for indices, the situation, that looks absolutely hideous when you open a new chart, doesn't it? I have no idea why they do this. Why do they do that? Right, just give me a minute, sorry, to make this look not horrible. And then we're moving. I could save it as a template, but just haven't got around to it yet. Okay, that's better, thank you. Right, so I mean, generally for indices, I think most things look pretty positive fundamentally. Like earnings season started off quite well, quite positively, right? It's just, I'm not sure there's really that much obvious impetus or catalyst for them to push a lot higher. So for right now, part of the reason I didn't really want to talk about indices too much this week is that most of the indices, they're not in very clear trends. And I think it's unlikely that they're going to be. Start moving in new clear trends. And I've actually had a pending order for the Nasdaq Open for more than a month. So I'm thinking about deleting it because it's just is it going to move down to 24,000? Well, yes, of course. Eventually, it's going to move down to 24,000. Yes, certainly. Do I want to buy when it goes down to 24,000? I'm not sure that I'm mad on the idea because it's been a sideways trend for quite some time. What I might do here is I might maybe move that up a little bit. Might maybe move it up to about 24,500, or possibly just buy now and turn it into a market order. I'm not mad on that idea either, to be honest. I mean, there's a few approaches here. I just think as CFDs, I certainly, well, let's go with point one. Matthias, point one. I mean, I certainly wouldn't think about selling my, any ETFs on the Nasdaq. Absolutely not. But I mean, as a CFD right now, this is just not really all that interesting to me. In that it's been more or less sideways for a while, and we can see that the range is overall declining. ATR is extremely low, and it's very difficult to predict when is the volatility actually going to come surging back. Sooner or later, it certainly will, of course. But I don't really want to be stuck in this position for a few weeks and then suddenly it goes boom, or possibly goes boom. So I would prefer just to wait until we start seeing volatility come back significantly and then try to build a position based on that. I know that's a bit of a useless answer, Mr. Matthias, but thanks for the question. And I mean, it's something that hopefully maybe might resolve within the next couple of weeks when we get the main section of earnings ceasing, as we were saying earlier. So if we go to earnings, we want to go to next week, then we have quite a lot of important tech shares that are going to be releasing next week, and we expect to see, I think, at least some impact on the Nasdaq from that. Most of the main tech shares are actually releasing next week. Yeah. So just bear with me for a minute while I'm looking at that. Oh yeah, some early next month. Yeah. Yeah. No, actually a few early next month. A few the week after that as well. Yeah. So hopefully Andreas will be here next week, same time next week for the next live stream, and he's going to be discussing this in a little bit more detail. But I think what I would look at, I would wait for the moment, is the short answer. I would wait for the moment, Mr. Matthias, and then I would just see what's the result of some of these earnings reports. Next week to some extent, the week after more, and also the week after that. Yeah. So, let's see what Barnett says. Hello, Michael. Did you give your breakdown for Eurodollar already? Yes, but we can look at that briefly again. I mean, the summary, I think, is this the kind of political-ish summary, I think is kind of similar to what we had for gold. And I said, in my opinion, that I think the bounce looks fairly strong. And currently the price is within this, I wouldn't necessarily call it a range yet, but I think you probably can call it a range. And of course, like, to illustrate that, my absolute favourite technique in the whole world is to draw a parallel channel and see does it broadly fit-ish, but not perfectly, and then say, okay, since we're in the lower part of the channel below the dotted line and bounced from what might possibly be a support, reasonably good buying volume, upward crossover of the slow stochastic within oversold, ATR reached a new low, is starting to move up. Probably going to expect it to move and test the area of the upper boundary of that channel. I would just stress that, like, I've literally just taken the draw parallel lines tool on Exness's web platform and just mashed it on the chart. This is not precise. We're not going to find a very precise target from there. So if in doubt, I would set my target a little bit lower, right? And let's see what happens around American GDP. You know. Because if you get GDP coming in lower, which I think is very likely, that's my kind of base case for the moment, then I would probably expect this to be moving further up. Just be ready to get out if necessary, which, I mean, it's not necessarily for it's not necessarily really for a forex pair to be jumping to get out, because if we hit the stop, we lose about $8. Okay, it's fine. It's not a big problem. And it's reasonably good ratio, slightly more than 2 to 1, so it's not bad. It's okay ratio. So hopefully that answers the question to some degree. Yeah, and if you want more details about fundamentals or anything else, we did cover that earlier. Yeah, so if you want any more details about that, you can rewind or rewatch. Yeah, so I think that's a bit. I think we're pretty much out of time. 5 past. So I would just say thanks very much everybody for attending the stream. Please remember to subscribe, turn on notifications. Just so you know when the next one's coming up and other interesting videos are coming up. Hopefully find them useful. Drop us a comment. I mean, and a comment can be critical. If there's something you want to see, something you want to see less of, then it's of course good to be critical. You follow us on TradingView. You follow us on X. My X handle is mstarkexness. And you can also follow us on TradingView, where we share, usually each of us, we share like at least 2-3 ideas per week. Not ideas in necessarily the formal sense, the same kind of formal sense as trade of the week, but potential, ideas. And stay tuned. Hopefully, trade of the week results video is coming within the next few weeks, possibly next month. And hopefully, join us again next week when Andreas will be doing his live stream, I believe, at the same time. When is Kojo back to do his live stream? I don't know, but probably it would be next week, I think. Usually it's on Wednesday if he's doing it. I mean, if you're subscribed, you have notifications on, then that's fine. You'll be notified immediately when Kojo's doing his stream, so no problem. And I would just remind you, please, that everything that I've discussed in this has been on a demo account, has not been a live account. No real money on the line here, please. Please do not blindly listen to what I've said and put real money on the line. Always do your own research, manage risk, and remember that trading is risky. There is a risk of loss from trading, and hopefully wish you successful and responsible trading. And I will see you again in 2 weeks at the same time for the next live stream. And you can hopefully join Andreas this time next week for the upcoming live stream. So thanks very much, especially for all the questions. That was great, really good session with great questions. Let's do that again soon.